Welcome back. More signs of a rebound in the housing market. CoreLogic reporting U.S. home sales are up 6 1/3% in October versus a year earlier. And Toll Brothers reporting net income that soared in the fourth quarter. But with fears of the fiscal cliff looming, are we out of the woods just yet? And are those worries prompting wealthy homeowners to sell ahead of possible tax changes? Joining me now to break it all down is Dolly Lenz of Prudential Douglas Elliman and Robert Frank, also with us, Diana Oleg. Good to see everybody. Robert, back in August, you were the first to report the trend, and now the race for homeowners to close before 2013 is certainly heating up. Just got a couple of weeks left before the fiscal cliff. What's at stake here?
Well, for the wealthy homeowners and sellers especially, it's a lot of money. If you have a $20 or $30 million home, you're talking of up to $1 million in tax savings if you sell now versus next year. Now, the concern this summer was that this could add to inventory and possibly depress prices. You had wealthy people that were not just listing their homes in hopes to sell them this year, but also taking lower prices just to avoid that higher taxes. But in fact, the housing market, especially at the top, has been pretty strong toward the end of this year. So I think some of those fears are now alleviated, especially with all the foreign money coming into places like Miami and New York. So I think, if anything, this will add some welcome urgency to those wealthy sellers that don't need to sell, but they just need a little bit of a deadline.
Right.
And it's kind of lighting a fire under them to sell. So I think it's actually been a positive for this market.
Dolly, what are you seeing out there? Is the tax, differential? I mean, capital gains going from what, 15% to who the heck knows what,
exactly.
25 or 30%. Is that motivating sellers right now?
I have one deal after another. All of our Christmas plans are off. My entire office is not taking a day off, period, from now till year end, and haven't for weeks. Ever since Obama won the election, we are now in deal mode. And I have to tell you, we're going to have a stellar year, but it's going to be at a price. The price is going to be, January is probably going to be much worse than predicted, February, March, etc. So we are borrowing from the future yet again.
That's a really good point, and that's really what I want to ask you. Is this just a short-term thing? I mean, next year in 2013, once we do see cap gains taxes go much higher, which they probably will, do things slow down again?
Oh, yeah, I think it will slow down again. I think people will hunker down, particularly with the whole fiscal cliff story hanging. And even if it goes over, which I predict it will.
So do I.
Yeah, so, I think catch as catch can now.
Yeah, Diana, what are you saying?
Well, I think in the high end, certainly where Dolly works in Manhattan, of course, it's going to have a big effect. But let's keep this all in perspective when we look at the overall housing recovery. Homes priced over $1 million were just 1.7% of home sales in October. Even homes priced over $750,000 were only 3.4% of the market. So this is a minuscule amount when you look at the overall housing market and the recovery. That's why we're not seeing prices come down. And also remember, the high end was hit the hardest in the housing crash. So if you bought your home, your multi-million-dollar home 5, 4, even 3 years ago, your price has probably come down so much that you're not really looking at any capital gains when you finally do sell this home.
That's a really good point, Diana. It is a small portion of the overall real estate market, Dolly. This very, very high end. What are you expecting in terms of pricing? When will we see prices start coming down?
Well, we may see it come down in pockets. For example, the Upper East Side, there's a lot of development going on. So if we have all these conversions, new development, plus a few homeowners deciding, I'm bailing, I could see that being a pocket where prices actually go down. Up until now, New York has really been really okay. It's been perfect. People have not suffered in New York.
Right. And Robert mentioned the foreign money. Is that a big factor?
Oh, huge factor.
Yeah.
Foreign money has been most of my business this year. Amazing.
Robert, we saw a similar back in 2010, right? When wealthy homeowners wanted to sell, they were afraid then that Congress was going to raise capital gains rates. Dolly's saying, yeah, we're seeing this rush of home activity now, but it slows down next year. Is that what you're expecting?
Yeah, it's such a key point because we've sort of seen this movie before. In 2010, there was the expectation that capital gains would go up, and at that time, places like the Hamptons in New York, we saw a lot of inventory come on the market, prices come down, and in fact, inventory went up 5 to 10% in the Hamptons, and then the next quarter, the first quarter of the following year, we saw a dead market. Nothing was happening. It took a couple quarters for things to rebound. Of course, they did. But Dolly's absolutely right. Today's sort of party will be the hangover in January and February. I think it's going to be a very quiet market. And again, that's what we saw in 2010 when there wasn't even a tax increase, just the expectation that we would have one.
Yeah, Diana, Dolly's talking about pockets of price changes. What are you seeing in terms of home prices overall from the broader market that you're looking at?
Well, from the broader market, we're seeing big price improvements. We get report after report this fall. They're not coming up quite as fast as they were over the summer, but we have definitely hit a bottom in home prices. And especially when we look on the low end, which is really when we talk about this housing recovery, we need to focus on the lower end distressed homes, get them through the system, get them sold off, whether it's to investors or owner occupants. That's the key issue in this recovery. When you look at pockets like, San Francisco, Manhattan, Miami, the really high-end markets, those are, again, being fueled by a lot of all-cash foreign buyers, and you're going to continue to see that money come in. If it does come down a bit because of the fiscal cliff, then that is small pockets. But overall, in general, in the country, we are seeing a firm price recovery.
Yeah, but the big issue there is if we eliminate the mortgage tax deduction for the people under $1 million, we really could get hurt in terms of the recovery and where we are now.
That's a great point. And this is why everything is tied to this fiscal cliff.
No, exactly.
Because you take out the mortgage deduction and this traction that we saw in the housing market reverses course.
Totally. I mean, I don't see how we can give $8,000 credits one year and then the next year we take away the mortgage tax deduction.
Right.
A little consistency would be nice.
Are high-end home prices, do you think, are they ever going to go back to where we were, where we saw them in the peak?
For the highest end of the market, yes. And I think they'll go even above the peak. I believe in that soon.
Why do you believe that?
Because people are looking at real estate really as an asset again. It's really an asset class. I think a lot of money is out of the markets and it's back in real estate. When you're getting 20% on your money, it's going to be in the markets. When you're getting 1% on your money, it's not going to be in the markets. It's going to be somewhere else.
Yeah, Maria, just on that point, I mean, we're already seeing above pre-crisis highs. At 15 Central Park West, when Sandy Weil sold his apartment for $88 million, that was more than he paid before the crisis. Miami, I was just down there mansion shopping with some Russian millionaires recently. Those houses, some of those multi-million-dollar homes, are above the pre-crisis highs. So in many of these sort of pockets, as Dolly put it, we're already above those pre-crisis levels. So I think we're just going to keep going higher. I'd love to be Dolly Lenz. She's in a great spot in this market.
You went mansion shopping, did you?
Yeah, we didn't buy anything.
All right, everybody. Thanks very much for your insights. We appreciate it. We'll see you soon.
Thank you.
We'll keep watching that real estate market. So critical to the overall economy.